we're going to get into the pro picks, which is the top 3 best investment ideas that Eric has. And this segment is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB Capital Markets Arm is a full-service investment dealer. It offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Your first pro pick is BTQ Technology. So in quantum computing, looks like a smaller market cap company. And is the CEO the same CEO of DeFi Technologies?
Yes.
Okay, so sneaky way to get the DeFi connection in. What do you like about BTQ?
So remember I said before, there's going to be quantum folks building the computers themselves, and then there's going to be the security plays. This is the security play. So their BTQ stands for Bitcoin Quantum. So the founder of DeFi was also the founder of Hive, which is sort of a Bitcoin miner, from 2015-16. And I first heard about it because he was telling me like his first vision for BTQ was that when he developed his own crypto wallet, he started hearing about this long-term potential threat of quantum computing, and he thought, wow, like a lot of people are going to have to pay attention to this. Maybe not next year or 5 years from now, but eventually. But this space kind of you have to make the investments today. So they've been working on this area of post-quantum cryptographic protection of crypto wallets and other RSA level security for over 10 years now. And it's really one of the only ways of playing a public stock that has focus on this space.
So it's 10x'd in like a month, 2 months. It's also had a drawdown, as a result of the NVIDIA CEO comment. Where is this on the risk meter? Like, you're not allocating like 10% of your portfolio to this. Like, how prepared should investors be, A, for big drawdowns, and B, like, how far away is this future?
Well, like all of these quantum names are announcing customer deployments today, and I expect,
and BTQ has customers,
and I expect they're going to have some kind of big name customers announced this year. They already have a bunch of hardware partnerships. They've worked with Foxcons of the world and Honhai and different hardware providers on different types of solutions. To this point, hasn't been a meaningful amount of revenue, but what's the potential here? I mean, this is a stock that's trading a few $100 million market cap today, even after this sort of 10x run up. CrowdStrike trades at like an $80 billion market cap. Now, they're not going to be an $80 billion company tomorrow, but this is an area post-quantum security where like a Palo Alto or a CrowdStrike can't just sort of snap their fingers and have a product out there in the market tomorrow. They're going to.
So would they just buy a BTQ?
They could, yeah. And so that's definitely something that could happen. I never want to buy and own a company for that reason. So I love the fact that this is kind of like, I see this as almost like a venture investment. And most of the time, public stock investors like me or others, they don't get a chance to kind of really buy in at a kind of very low market cap. Like a Rigetti, which we might talk about later, is like, a $2 billion. So BTQ would have to 10x from here to match Rigetti's market cap. And there's still the potential for all of these quantum names beyond that. So for me, I think this is a kind of name that you want to put in your TFSA or your kid's RSP, tuck it away. I think it's going to have, some meaningful appreciation in 2025, but certainly 2 years from now, 3 years from now, I think it's going to be, multiples larger than, a few $100 million market cap. So that's why I like it. And that has nothing to do with interest rates and the economy. And even if there was some sort of like 2022 type pullback, these names, I think are going to have growth stories of their own that are completely orthogonal to all this kind of macro stuff that we usually get bogged down in talking about.
Okay, so that brings us to Rigetti, which is your second pick. This one fell 55% in the course of a couple of days. And yes, it's been huge. But, I know you look at momentum. This is like, a hot knife through butter. Why get in front of a name that has been just like slashed like that? Is that a risk? How do you view it as a buying opportunity, if not a risk?
I look at the Jensen comments as sort of like it's cast a cloud over the whole sector for probably, a 2-week period. And then there'll be some other announcement, some new announcement, some updated, version of, that somebody ships of a new quantum threat or something. I just think at a $2 billion market cap here, where, post sell off, I just think there's a bunch of like the risk reward is now suddenly way skewed to the upside from here.
Now, I know you don't want to talk about this, but yes, it's a $2.5 billion market cap company on a company that has 11 million in revenue. Why isn't that a problem?
Well, their competitors, with their systems are Google, IBM. Both of these companies, like obviously huge mega cap companies, have teams of people working in this area. And Google has shown an ability to actually ship something. But typically these larger companies don't. And so I like the idea of like putting some investment dollars behind a more entrepreneurial name. That's sort of, that's all they have. They have to live and die by what they do. They don't depend on search or anything like that. I also know Spencer Rascoff is like former kind of CEO of Zillow. He orchestrated the whole SPAC and de-SPAC of Rigetti, back in 2021 or whatever it was. I know a bunch of people who were investors in the original, de-SPACing. So I just believe in the company long term. There's actually a Canadian founder, Chad Rigetti, who's no longer with the company, who was the one who started this company originally. So I just think there are a lot of things that can go right here. And probably the first thing that's going to happen is Trump, assuming the presidency, and what happens when we get the first announcements of a pro-quantum crypto strategy that Trump is getting behind.
You said that, well, at least with the previous one, BTQ, it's like immune to interest rates. But is it really? If we're talking about a high interest rate environment, doesn't that knock on these profitless tech companies, like the most speculative kind?
These are the most speculative. I mean, this is even more speculative than like a biotech or something. But like you have to believe that quantum is going to be successful for the long term to kind of put some of your money behind some of these names. But assuming that they will be, like, you're not waiting for some phase 1 trial to be completed, phase 2, phase 3, like a biotech name. Like in some ways, the fact that they are so speculative, and there's such this long runway ahead of them, so that gives me comfort. Again, like it's similar to this sort of Bitcoin 2013 type of analogy time frame, where I just think your upside is so much greater if assuming that you don't have to kind of use this cash immediately for the next 1, 2, 3 years.
Okay, your third one, I feel like we have a good sense of who you are right now. So the third one seems like it's right in your wheelhouse. It's Peloton. And your specialty seems to be finding names that are left for dead and waiting for that turnaround. So Peloton is down 95% since the pandemic. But in the last 6 months, it has surged 140%. Is this the turning point?
I think so. I think this is going to turn around faster than Opendoor for sure. They are already profitable. They've shown that over the last few quarters. They have a new CEO that just started last week, who took over for Barry McCarthy, who's sort of leaving, who people thought was going to be the turnaround architect. So this is a value opportunity. Like there's a lot of admin costs, marketing costs. Has anyone seen a Peloton store in the malls recently? Like actually before the holidays was the first time I ever saw a customer in any of these stores. This new CEO who used to run Apple Fitness Plus, I think has ample opportunities to cut costs. And then they've got this core group of loyal subscribers who are going to keep paying up for this service. So not a lot has to happen for them to become much more profitable this year. And a little bit of growth, which is what Carvana saw, not a huge amount of growth, a little bit of growth. Suddenly this becomes like a massive turnaround opportunity.
Stock's at $8.50 and change right now, $8.50. Where does it go?
If everything goes right this year, this could be a $30 to $40 stock in 12 months.